People got to get paid, and I'm going to tell you, your lenders or your banks have to get paid. The second thing, a dark place, is just capital in general, relationships with banks, relationships with could be potential partners, really the whole dollars and cents, taking out sizable loans or sizable debt, believing that you can create a business that's going to generate cash for you to be able to pay the debt. And they have these crazy things with the banks called covenants, and if you don't have a certain debt to equity ratio or a profit margin, they have usually a handful of covenants. If you can't meet those ratios, they call the loan. And what that simply means is you got to pay it back, and you got to pay it back now. They want it back. You haven't met the loan. Or what happens is they exercise what's called their proxy rights, and they end up taking over the business. So now instead of debt, they convert the debt into equity, and they end up owning the company. It would be the same as a house. It would be like the bank foreclosing on your house. You didn't make the mortgage payments for your home. This is how to put it in real life terms. You lose your job, and so you can't afford the bank payments on the house or the mortgage. So the bank forecloses on the house, and they try to get you out of the house, right? And so now what happens is, who owns the home? You say, well, what about my down payment? There's equity in the house. No, there's no more equity because you didn't fulfill your obligation to the bank to make the payments.